Hello and welcome to MC Pro Stock of the Day with me, Stacey Pereira. In this segment, we bring you some fundamentally strong stock ideas that you could consider in your portfolio. Today's pick is CMS Infosystems. Let me tell you a little bit about the company. It is a leader in the cash management business and has a prominent presence in cash logistics, ATM management as well as tech solutions domain. It does provide integrated end-to-end solution offerings to the banking sector. HDFC, SBI, ICICI, Axis Bank are among some of its key clients. So why are we looking at CMS Infosystems now and what are the potential growth drivers for the company? See, the ATM pipeline seems quite strong for the medium term. PSU banks have a refresh cycle currently and are likely to add about 80,000 plus ATMs for managed services, whereas private sector banks are also witnessing huge branch expansions with 20,000 plus new ATMs and ATM managed services expected. So we are staring at a 1 lakh odd ATMs that could be outsourced for cash management. So it would be safe to say that with all this banking expansion, it will create further opportunities, meaning that there is a large TAM or TAM, a total addressable market. Now, the banking and automation as well as cash logistics as an addressable market is likely to grow by 19% CAGR till FY27. BFSI remote monitoring market is also growing at a CAGR of 25% till FY27. And if you were to consider the AIoT or artificial intelligence of things, remote monitoring is likely to be expected into the NBFCs, insurance as well as retail sectors. Let's then take you through some of the company's financials, its Q3 FY24 performance. Now, it did report a revenue growth of 19.2% on a YOY basis and a 7.1% sequentially. EBITDA margin was at 25.9% and also had a 1,250 crore rupees worth of new managed services order, and this win happened in this year alone. CMS Infosystems is also determined to improve its compliance in order to achieve that realization per ATM. Currently, the cassette swap compliance is at 15%, while the root compliance is at 85%. And if you were to consider the company's balance sheet, it has no debt on its book and the management is confident of achieving about 2,500 to 2,700 crore rupees in revenues by FY25. As for the stock's valuation, it is reasonably attractive at 13.6 times its forward estimates for FY26 EPS or earnings per share. But are there any risk factors that you need to be watching out for? Well, any delay in meeting those compliance requirements could see some delay in the growth process and of course change in regulations. Now that needs to be watched out for. With that, it's a wrap. Thanks so much for tuning in.